when we consider the first part of what he had to say there, this notion that jobs were double what the average expectation was, we did see a lower than expected unemployment rate, even as labor force participation was picking up. That is one way you could view and characterize this report. The other is, of course, look at the revisions, look at how gains are kind of exclusively in sectors like healthcare. How do you look at it today?
That's right. I do feel like focusing on the revisions is important. And I don't want to take away from the fact that we beat expectations on the labor market for January, although I do think that it's important to recall that expectations were quite low. So the revisions that the BLS announced led to a total net job gain for last year of 181,000 jobs. That is a number that we used to see as a month-over-month gain on a pretty regular basis. And in fact, in the 10 years prior to last year, the average job gain over the year was about 1.9 million jobs a year. So what we've seen is this very anemic job growth. And, you know, I was here last year during some of these prints, and it was already concerning what was happening with the unemployment rate, what was happening with the pace of hires and firing. And to then see that actually we were way off and the labor market was much softer than it appeared, I think is troubling, though it does kind of align with some of the anecdotes that we've been hearing from job seekers who say it's difficult to find a job. We're seeing those jobs numbers start to look a little bit more like that soft labor market that people were experiencing.
Interesting, Kitty. But the president says the golden age of America is upon us. So when do the jobs start showing up?
I think that's a great question. And, you know, Kaylee, you mentioned that what we saw in the revisions and in the monthly data is increasingly what job growth there is driven by the healthcare sector specifically. And in fact, you know, last year outside of healthcare, there was actually a net reduction in jobs across the economy. And thinking about, you know, where are those healthcare jobs? Are they good jobs? Are they going to continue to deliver, especially given that the president has passed into law really large healthcare cuts that are going to start coming down the pike over the next few years, and families are having to face really high healthcare premiums. You know, thinking about, we see GDP growth continuing, and people are often very focused on, is this a sign of a recession? Are we at a tipping point? But I think the bigger question is, how is the economy performing for real people? Mm-hmm. And so when we see GDP growth that is driven to an outsized extent by, for example, the building and stocking with materials of data centers for AI. One way to look at that is that AI is driving GDP growth, but is it driving jobs? Is it driving increases in wages? Or is it just sort of an accounting fact that we have a lot being spent on computers? So really thinking about how this impacts workers and the day-to-day. And we might not be in a recessionary environment, but you can still have a softening labor market that's going to hold down wages, going to make it hard, especially for new graduates and other entrants into the labor market, to get a job that can pay the bills.
Well, and I'm sure the Fed and officials there are considering some of those very same questions you were asking about what dynamics are actually at play here, both when it comes to growth overall and in the labor market. So if you're sitting in the Federal Reserve right now, you look at all this data before you, is it supporting the idea that we need looser policy, that more cuts should be coming, or not?
I think it's a complicated question for the Fed to deal with because, of course, inflation remains elevated. And the Fed is very concerned about signaling to the markets that they are going to keep inflation under control and bring it back down. You know, Jerome Powell has reiterated on multiple occasions that the Fed's target rate is still 2%, and we're well above that. And so they are balancing those equities. I do think that, you know, the president's advocacy is a little bit of a double-edged sword. As you were pointing out, he's at the same time saying that this was incredibly strong labor market conditions that we're seeing, and also we should cut interest rates. I think there are also issues with the new nominee for the Fed Board of Governors, for the Fed chair, is really being received as mostly a political appointment who will do what the president says or will try to. I think that other members of the Fed Board of Governors are going to be concerned about maintaining a posture of neutrality and of independence. And it's all going to be really difficult as it plays out. And I'll be watching along with you.
I want to get back to this impact of AI on the job market, because it's impossible to quantify right now. Elon Musk just told a podcast that created this vision of buildings 20, 30 stories tall, filled with humans doing calculations that will soon be replaced by a laptop. If you can't forecast that, how does the Fed forecast that? How do you have any estimate for where we're going?
I think that we are in a little bit uncharted territory in some ways, but also this isn't the first time that we've had a potentially disruptive technology enter the scene. And I think it's important to keep our wits about us as we measure what we think of Elon Musk's predictions versus what we're actually seeing in the labor market.
Well, I could point you to Anthropic, and it only gets worse from here in some cases, by the way, that will all be replaced at some point. You're going to have two AI Kaylee and Joe sitting here interviewing Kitty Richards.
I mean, one thing that I'd say is that what we know from the history of technology adoption is that it's really up to us as a society to decide whether technologies like AI are used to provide more to Americans, to provide more, leisure, more productivity gains that lead to higher wages, support people in their jobs, or whether things just kind of get worse and worse, and cost-cutting increases, and people are de-skilled, people's jobs are de-skilled. These are policy choices that we really have to make. And I think if we just let the sort of techno-optimists who also stand to make another $1 trillion, if things go their way, if we let them entirely set the agenda, we're gonna see the worst possible effects.
He was wearing a T-shirt that said Optimism Prime. It's funny.
Optimism for whom?
Yeah.
You could probably do a whole thing on Elon Musk and the various T-shirts.
It's got to be.
Remember the apparel he had early on in the early days of this administration. Just quickly, Kitty, before we let you go, as we're approaching tax refunds, we are in tax season now, and the argument Republicans are making is Americans are about to get a way bigger refund than they expected, and this is going to be juice for the economy. Given everything that we're seeing with the cost inflation, with wages not necessarily keeping up, as you were alluding to, should we expect that's going to be funneled back into consumption, consumer spending, or is that literally just assistance in making ends meet?
Well, unfortunately for the Republicans making this argument, I think that given how much they've hyped up the effects of their tax policies, Americans might be expecting a significantly larger refund than they are going to get. Because remember that the vast majority of the Republicans' tax bill flowed to the wealthy and corporations. And so your typical American family did not have much to gain there. What they have seen, unfortunately, is these skyrocketing healthcare premiums, partly because of the expiration of the ACA subsidies. And what they're going to see out of the One Big Beautiful Bill Act is Medicaid cuts.